Did Donald Trump, the self-proclaimed tariff man, single-handedly save China from economic collapse? Or did his trade policies push the world's second-largest economy to the brink before pulling it back? In 2025, President Donald Trump's trade policies sparked a global firestorm. His aggressive tariffs on China, some as high as 145%, disrupted supply chains, rattled markets, and brought trade between the world's two largest economies to a near standstill. But then, a surprise deal in Geneva slashed those tariffs, leading some to claim Trump saved China from economic disaster. Others argue he nearly caused it. So what's the truth? Let's start with the big question: how did Trump's trade policies influence China's potential breakup? To understand this, we need to look at the timeline of 2025. When Trump took office in January, he wasted no time. On day one, he issued a presidential memorandum titled America First Trade Policy, signaling a hard pivot toward protectionism. By February, he invoked the International Emergency Economic Powers Act to slap a 10% tariff on all Chinese imports, citing the fentanyl crisis as a national emergency. This was followed by a staggering 20% additional tariff on most Chinese goods and the end of de minimis exemptions for low-value imports, pushing the effective tariff rate on Chinese products to as high as 145% by April. These tariffs weren't just numbers on paper. They hit China's export-driven economy like a sledgehammer. In 2024, the U.S. imported $438.9 billion in goods from China, accounting for roughly 3% of China's GDP. With tariffs making Chinese goods wildly expensive, U.S. imports from China plummeted. Shipping data from Linerlytica shows Chinese freight bookings to the U.S. dropped by 30 to 60% in April alone. Factories in China's industrial heartland, especially in furniture, textiles, and toys, started shutting down. Nomura, an investment bank, warned that the trade war could cost China up to 16 million jobs. But here's where it gets interesting. Some analysts argue that Trump's tariffs didn't just hurt China, they forced it to confront deep structural issues. China's economy was already grappling with a deflationary spiral, skyrocketing debt, and a collapsing property market. Posts on social media platforms in China described factories closing, banks freezing accounts, and workers going unpaid. The tariffs amplified these pressures, pushing Beijing to the negotiating table in Geneva by May. The result? A deal to slash tariffs by 115 percentage points, bringing the U.S. rate on Chinese goods down to 30% and China's retaliatory tariffs on U.S. goods to 10% for a 90-day truce. So, did these tariffs push China toward a breakup? Not quite. A breakup implies political or territorial fragmentation, which was never a realistic outcome. But economically, the tariffs exposed China's reliance on exports to the U.S. and forced Beijing to rethink its strategy. Instead of collapse, the pressure may have accelerated reforms like boosting domestic consumption and diversifying trade partners. But it came at a cost. More on that later. Now, let's imagine a world where Trump didn't impose these tariffs. What would have happened to China's economy? To answer this, we need to look at China's pre-2025 challenges. The country was already in a precarious spot. The International Monetary Fund, Goldman Sachs, and UBS all downgraded China's 2025 growth forecasts, citing a property bubble burst, local government debt, and weak consumer spending. The National Development and Reform Commission's Zhao Qinxin admitted in April that China's economy was in a fragile recovery even before Trump's tariffs hit. Without Trump's tariffs, China might have muddled through with its usual playbook, heavy government stimulus and export reliance. But this was risky. China's trade surplus with the U.S. was $295.4 billion in 2024, and losing access to that market without a shock like tariffs could have delayed necessary reforms. Beijing might have doubled down on state-driven investments, further inflating its debt bubble, estimated at 300% of GDP. A report from the Council on Foreign Relations suggested that without external pressure, China's economy could have faced a slower, but still painful, decline as global demand for its exports weakened. However, there's another side. Without tariffs, China could have avoided the immediate pain of factory closures and job losses. Small and medium-sized businesses, especially in southern China, were hit hardest by the U.S. tariffs. Cindy Allen, CEO of Trade Force Multiplier, noted that the jump from 0 to 145% tariffs was untenable for many firms, forcing some to exit the U.S. market entirely. Without this shock, these businesses might have survived longer, giving China more time to pivot to markets like Vietnam or India. But the lack of urgency could have left China unprepared for a global shift away from its exports, especially as countries like the EU expressed reluctance to decouple from China. So, while Trump's tariffs caused short-term chaos, they also acted as a wake-up call. Without them, China might have delayed reforms, risking a deeper crisis down the line. But the cost of that wake-up call was steep for both sides. So, why does Trump believe his actions prevented China's economic collapse? Let's get into his head for a moment. Trump has long framed himself as a dealmaker who uses tariffs as leverage. In April 2025, he told reporters, "We're going to have a fair deal with China," hinting that his tariffs were designed to force Beijing to negotiate. By May, when the Geneva deal was struck, Trump's team touted it as a win, claiming it saved both economies from a catastrophic trade war. A White House fact sheet from May 12 declared the agreement a historic trade win that addressed the $295.4 billion U.S.-China trade deficit and protected American workers. Trump's logic goes like this. China's economy was teetering and his tariffs pushed it to the edge. By pulling back with the Geneva deal, he gave China a lifeline while securing concessions like China's promise to crack down on fentanyl precursors and remove retaliatory tariffs. Treasury Secretary Scott Bessent reinforced this, saying the goal was not a generalized decoupling but a rebalanced trade relationship. Steve Bannon, a longtime Trump advisor, admitted it wasn't a total victory for hawks wanting a full break with China, but it showed Trump's willingness to compromise to avoid global chaos. But here's the catch, not everyone buys this narrative. Critics like Michael Strain from the American Enterprise Institute argue that Trump's tariffs achieved little beyond raising U.S. tariff rates to their highest since 1937, 17.8% on average. They point out that China made no major concessions on structural issues like intellectual property theft or state subsidies. Plus, the tariffs hurt American consumers, with the Tax Foundation estimating an average cost of $1,200 per U.S. household in 2025. So, while Trump believes he saved China by de-escalating, others see it as a retreat from a policy that was hurting the U.S. just as much. What if Trump hadn't backed down in Geneva? How would China's economy have fared without the tariff deal? The outlook is grim. With tariffs at 145%, Chinese exports to the U.S. would have become prohibitively expensive. Goldman Sachs estimated that a prolonged trade war could shave 2.4 percentage points off China's GDP. The IMF warned of a global recession, with China's growth potentially falling below 3%, a far cry from Beijing's 5% target for 2025. Factory activity was already contracting at its fastest pace in 16 months by April, and a prolonged standoff could have led to mass layoffs and social unrest. China's response to the tariffs showed resilience but also vulnerability. Beijing rolled out monetary stimulus and pledged support for hard-hit industries, but these were stopgap measures. Without the U.S. market, Chinese companies struggled to find alternatives. Developing nations couldn't absorb the same volume of exports, and countries like Vietnam and India faced their own tariff pressures from the U.S. Plus, China's retaliatory tariffs on U.S. goods like $15 billion in energy exports hurt American firms but didn't offset China's losses. Without the Geneva deal, China might have faced a deeper economic contraction with ripple effects across Asia. But it's not all doom and gloom. China was already diversifying its trade partners, signing deals with Vietnam, Cambodia, and Malaysia. Xi Jinping's government has spent a decade cushioning the economy against trade shocks by boosting domestic consumption. A prolonged trade war might have accelerated this shift, forcing China to rely less on exports. Still, the transition would have been painful, with millions of jobs at risk and supply chains in chaos. Finally, what signs suggest Trump's approach kept China from breaking apart? Let's be clear, China's territorial integrity was never seriously at risk. But economically, the tariffs could have pushed China into a deeper crisis. The Geneva deal in May 2025 offers the strongest evidence of stabilization. By reducing tariffs to 30%, the U.S. allowed Chinese goods to flow again, preventing a total collapse in trade. U.S. imports from China surged post-deal as businesses restocked, easing pressure on Chinese manufacturers. Financial markets rallied, with the Dow gaining 2.6% the day the deal was announced. Another sign is China's willingness to negotiate. Beijing sent Vice Premier He Lifeng to Geneva, a signal it took the tariff seriously. The deal included commitments to address fentanyl and remove retaliatory tariffs, showing China's readiness to compromise to avoid further pain. Social media posts from China described a sense of relief, with fewer reports of factory closures after the deal. This suggests Trump's pressure, followed by de-escalation, may have given China breathing room to stabilize. But there's a flip side. The tariffs exposed China's vulnerabilities, and the 90-day truce is temporary. If talks falter, tariffs could spike. Trump's tariffs sparked fierce debate. Supporters argue they forced China to the table and protected American workers. Critics, like economist Douglas Holtz-Eakin, call them a chaotic mess that achieved little beyond higher prices. The tariffs cost U.S. consumers dearly, with retailers like Walmart warning of empty shelves and price hikes. Globally, the IMF projected a 0.5% drop in world GDP due to trade disruptions. And then there's the geopolitical fallout. Trump's policies pushed allies like Vietnam closer to China, undermining his goal of isolating Beijing. The question remains, did Trump save China, or did he just delay the inevitable? Why did this all happen? Trump's tariffs were driven by a mix of economic nationalism and strategic leverage. He saw China's trade surplus as a threat to U.S. jobs and security. The effects were immediate: supply chain chaos, higher prices, and global uncertainty. But the Geneva deal showed both sides blinking in a high-stakes game of chicken. Looking ahead, the 90-day truce buys time, but the U.S. and China must tackle deeper issues, like intellectual property and subsidies, to avoid another showdown. For China, the challenge is diversifying its economy. For the U.S., it's balancing protectionism with affordability. The world is watching to see if both can find common ground. So, did Trump save China from economic collapse? His tariffs shook China's economy, exposing its weaknesses and forcing Beijing to negotiate. Without them, China might have delayed reforms, risking a slower decline. But the Geneva deal, while a lifeline, hasn't solved China's deeper problems or America's. The tariffs cost U.S. consumers and disrupted global trade, and the truce is only temporary. Trump's approach may have kept China's economy from unraveling further, but it's less about saving China and more about reshaping global trade. Only time will tell if this was a masterstroke or a misstep. What do you think? Did Trump's tariffs save China, or did they do more harm than good? Drop your thoughts in the comments, hit that like button if you found this deep dive helpful, and subscribe for more stories that unpack the world's biggest issues. Don't forget to ring the bell so you never miss an update. Thanks for watching, and we'll see you in the next one.